Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. Hello, Profit Hackers, and welcome back to the Contractors Profit Hack Show. I'm Jeremy with Foundation Accounting and Consulting, and we're here to have one more conversation about ratios. So if you are fed up with the math, know that this is it. That's where we end. There's no more math after this. Just kidding. There's always math in accounting. But again, like my friend Dan Ravisto likes to say, it's third grade math. Add, subtract, multiply, divide. That's really all you need. That's really all you need for accounting, right? And we can all handle that, hopefully. So this last concept that we're going to talk about is about custom KPIs and a term that is often used in software development. And I'll let you know what that is here in a moment. But to introduce this, I've got a story for you. I loved my time wrestling at BYU, and I had a ton of fun. When I got home from my mission and started wrestling again, the one person that I ended up working out with quite a bit, his name was Rangy Smart. Rangy Smart was, I believe, a two-time champion, maybe three in high school, and he had a very respectable career in college. He was a good wrestler, really solid. One of the greatest things about Rangy was his scramble. So it was really hard to score on him because he was really good at the scramble, right? And Rangy's big thing was and you're welcome to giggle about this. If you're not a wrestler, you're welcome to giggle. But his favorite move was a high crotch to your left leg, right? Now, there is a normal and goofy-footed concept in wrestling as well, right? You can lead with your left or lead with your right, right? Most people, because they're right-handed and they're normal, they lead with their left foot. And so Rangy had gotten really good at hitting the high crotch on that left leg, right? Because that's what most people led with. And he had great setups for it, and he was dangerous with it, right? And I kept getting beat by him over and over and over. He kept taking me down, and I was getting really frustrated until one day when I sat back and I realized, hey, he's always shooting on my left foot. I'll try leading with my right foot. And I'm actually do, snowboard goofy footed and my stance in wrestling is goofy footed. I do lead with my right more comfortably, but I had been leading with my left because that's what you get taught. That's the norm. Anyway, so I started wrestling him and leading with my right foot. All of a sudden, Rangy's offense was shut down completely, right? He couldn't take me down anymore. He had one move. It worked really well. But if the circumstances weren't correct, then he had all kinds of problems, right? And so I want to circle back and compare that to ratios, right? If Rangy had had a variety of different takedowns, then when the high crotch wasn't working on that left leg, he could have had something else to make some adjustments and to use to still be able to score, right? Still be able to create some offense. And it's the same way with our KPIs, right? There are some standard KPIs. The ones that I have spoken about a little bit, especially gross profit margin, days in AR and days in AP, those are super important, okay? You got to know those numbers. If you don't know those numbers, then I don't know how you can run a profitable business. I really don't. It's just running it by gut feeling and never really knowing what's going to be in your bank account. And it's a horrible scenario. Believe me, I did it for 15 years. Anyway, and so those are important to track. All other KPIs, you can throw out the window. Completely throw them out, right? You may not need them. And then you can start reintroducing them and looking at each individual ratio or key performance indicator and decide if that is something that you want to track in your business. You need to decide if that will help you be able to be more efficient or make more profit, right? If you can use it that way, then it's worth tracking. Let me make a recommendation. There is a book called Traction by Gino Wickman. You've probably heard of it. In that book, he boils it down to one number for each person in your business. One number for each person. One number for other important things to track. Your marketing, your I don't know why I'm spacing out here. But anyway, yeah. So you want to make sure that you are coming up with one number for each part of your business, right? Equipment. That was another one that I was going to throw out there. For each piece of equipment that you're using, you want a number to see if it's efficient, to see if they're using it well, to see if we need more training, or to be able to glean the good things that they're doing and teach those to other people and incorporate that into your system, right? So he recommends one number for each of those items. And if you do that, it makes it really, really simple to know if something is operating well or if something needs a second look, right? So with the one number idea from Gino Wickman, we don't want to get in the habit of just looking at that number and saying, oh, that's good, or oh, that's bad, right? What we want is we want it to be an indicator, key performance indicator. We want it to be an indicator on if it's something that needs to be addressed immediately, or if we can review that during our normal process as we go along, right? And help to grow the company. So that's the reason that we want one number for each person. So whether that is for a salesman, close rate, or dollars per close, if it is somebody working in the field and we want profit per employee or profit by crew or truck, if we want to track the profit by equipment, all these different things we can track, right? And we can use those to indicate when performance needs to be scrutinized more heavily. Okay? And so the concept that I'm going to introduce from software development is GIGO. GIGO. It's an acronym, and GIGO stands for garbage in, garbage out. And the reason that's a term in software is because if the data comes into the system poorly, in a bad way, or not complete, what you're going to get out on the other end is also going to be poor and incomplete. Okay? And so when we're tracking these numbers, we want to make sure that we know what we want to track, because unless we are capturing those numbers accurately and putting them into the system where we're tracking those numbers, then it's going to be pointless to even try and track that, because we won't have good information to help us come up with a good number, right? Garbage in, garbage out. And again, to tie this back to wrestling against Rangy Smart, make sure that you are going through those KPIs and you're deciding what makes sense for your business. And don't just go with one thing. Know what's available out there. Know what your different options are. And then you can start selecting some of those additional options that will help you track efficiency across your whole business. Okay? Rather than just the one move, right? That's the tie-in there. So hopefully you will take a look at some different ratios and KPIs. You'll talk to some other larger businesses and see what they track for efficiency, and it'll give you some ideas of how to be able to track the efficiency for your business, right? So I'm Jeremy with Foundation Accounting and Consulting, and thank you very much for listening in. We'll see you next time, and we will talk about a subject other than key performance indicators and ratios. So thank you, and I'll talk to you soon. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.